Hey guys, how's it going? It's Andy from Magoo Investing. Happy Monday. So I've been putting off this video for a long time. It is one of the longer videos just because I wanted to do more research on it. Today I'm going to be talking about green stocks that I'm looking to buy that are going to have huge returns going forward. I think green energy is one of the most exciting areas to invest in, and considering I've spent the past 5 years getting 2 pieces of paper to my undergrad and my graduate degree in marine biology and conservation, this is something that I'm really passionate about. So I wanted to give this video justice and talk about 5 or 6 of the stocks that I'm looking to buy going forward that do have green energy potential and are going to be an area where I can invest in something that I really care about, but actually have returns to back it up. So I think this is a great example of you don't always have to buy these stocks that are not something that you agree with morally. Obviously, there's some people that disagree with a lot of the major companies, and I think there are some great opportunities for people that want to be more conscious about their environmental footprint. I think these are some great options. So I am going to quickly start off this video saying that I'm not going to be talking about Beyond Meat in this video. I think Beyond Meat is a great way to reduce carbon emissions when it comes to meat production, but I did talk about it in a video last week, so I will link that above right now. Also, if you can tell, I'm at my parents' house, so things are going to be looking a little different going forward. So I'm still trying to find the best way to record and make things look good. So let me know what you think of the setup at this point. But before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, really appreciate it. Hit that like and subscribe button, as would help my channel out a lot. So the first stock I want to talk about is going to be NIO, ticker symbol NIO. Currently, NIO is trading for $41, and it's up 920% on the year. I put NIO on this video because it is an electric vehicle company, and as we know, carbon emissions coming from fossil fuels used in fuel production is a huge part of climate change. So having these EV stocks are very exciting. And I could have put something like a Tesla on here, but I wanted to put a NIO on it because I think the Chinese EV companies have been really exciting so far this year. There have been some threats about delisting. If you've been paying attention to some of the Chinese stock news in the past couple weeks, there was a bill that went through that is likely going to get passed that would require companies to provide more transparent financial information on the company. And so if you've been around this channel for a while, this has been one of my huge gripes against investing in Chinese stocks, because there have been some problems in the past of companies not being completely transparent about their financials. The most recent example that I can think of comes with Luckin Coffee, ticker symbol LK. And so this does look like it could be a potentially bad thing. If you just read the headlines and it says these Chinese companies are going to get potentially delisted, it looks pretty dire. But if you actually read into what it means, likely it would take 3 to 5 years to delist if it actually goes through. Also, NIO has come out and their CEO said that they believe that their practices already meet the requirements set by this new legislation. So I don't think you really have to worry about this as a NIO investor. This is something where it makes investing in Chinese stocks safer, and so it should be a positive thing. There's likely going to be some retaliation from the Chinese government, maybe in the form of tariffs. And so it's going to be interesting to see how this actually plays out in the future, but NIO is not a stock that is at risk of being delisted anytime soon. So the stock did fall last week after it announced that it was offering 60 to 70 million shares as a way to raise funds. And this is not something that's been unique to NIO. Pretty much all of the EV companies last week took advantage of their extremely high prices by offering millions of shares. The stock did fall because as you increase the number of shares out there, it dilutes the value of all the rest of them. But for a company that was in danger of going bankrupt like a year ago, it does make sense that they're taking advantage of the almost 1,000% that the stock has increased so far this year to take advantage of that to raise as much funds as possible. So I think this is a good thing. They're talking about how they're going to be using this money to improve their network, improve their sales, and just it's going to be a positive for the company overall, even though in the short term it does dilute the value of all the stocks. So the company has been killing it with deliveries so far. The numbers from November, they saw 5,200 deliveries, which was a record, and they say a 100% increase year over year in October with 5,000 deliveries. One of the most exciting parts of this company comes from their battery swap program, which if you understand how Tesla works, they have all these superchargers placed pretty strategically around so that you can get between all of them without running out of fuel. But it's really interesting because this is a battery swap program that would be able to swap out your battery in less than 5 minutes, and you do pay like a subscription to be able to use that. So for a company, this would bring in recurring revenue, which is always a positive thing. And I think it's something that I realistically could see happen in some of the major US cities going forward. So it's going to be some exciting technology, and I'm very interested to see how it's actually going to play out for these companies. So as of right now, it's hard for me to be super bullish on a company that's up almost 1,000% on the year, but for a long-term potential, I absolutely love the EV stocks, and I think anything like a Tesla or a NIO is great for the environment, and I think it's going to have great returns going forward, even though it might be a little choppy going forward for the short term. So long-term, very bullish on NIO. And then the next stock I want to talk about is something that I actually do own shares in, so I do want to disclose that, but I'm going to be talking about General Electric, ticker symbol GE. Currently, GE is trading for $11, and it's down 2% on the year. So I have a put that I sold on the company. And normally when I sell puts, I use the premium and I invested into other areas, but I do feel very positively about GE overall. So I have been using the money that I've been collecting from the premiums to buy just actual shares of the company. So I do have that position. I do have like between 5 and 10 shares of GE at this point, and it's likely going to increase over time. And the reason that I feel very good about that is because I'm loving the trajectory of the company with the renewable energy part of their business. If you've been paying attention to GE so far in 2020, the reason that they've been having a pretty tough time comes from the damage that the aviation industry has been seeing, considering that they are selling a lot of the engines to the Boeing planes that have been grounded, and the sales have been dropping as the demand for air travel has been shrinking in 2020. And so while it doesn't look great, and you look at the all-time chart and then the 5-year chart, doesn't look great, but I think this is a great bounce back stock and one that's going to do very well when it comes to renewable energy. And so they got crushed this year. As I mentioned, their aviation part of their business was down 44%. And while the renewables probably isn't going to be enough to change the trajectory of the company, I do think it will help. And so they've been announcing some very interesting deals. The company has announced wind turbine deals with Lithuania, and they're also providing turbines for the world's largest offshore wind farm. They also announced that they're going to be having a wind turbine recycling program that would break down old turbines for use for cement production, and that would reduce carbon emissions by 27% for cement production. So this is something where it has a very net positive result. It is a stock that I think it's going to bounce back significantly over the next couple of years as aviation, it has to come back eventually. We're starting to see the rollout of the vaccine stuff, and I'm expecting their boost to come from the aviation and the renewables going forward. So while they did have a $5 million profit from renewables in Q3, it is pretty tiny compared to the other segments of the business. But I do think it will be a part of the company's recovery, and I'm very long-term bullish on the company overall, mainly from the bounce back, but I think the renewables are a very exciting part of the business, and I'm very curious to see how they're going to do in the next couple years. Okay, so the next stock on this list is going to be Brookfield Renewable, which is ticker symbol BEP. Currently it's trading for $40.30, and it's up 62% on the year. If you've been following the stock, the price may seem a little funky, and since I had planned out this video last week, I kind of forgot that they went through a 3-to-2 stock split on Friday. So I had the stock at like $51, and I was very confused to see it at $40 this morning, but they did go through a stock split, so that's why it looks like that. And so I like Brookfield because it doesn't just focus on one type of renewable energy, and they're involved in hydroelectric, wind, and solar facilities. Right now, around 65% of their free cash flow is going to hydroelectric, but we are starting to see a switch. They have been expanding their solar capabilities that will lead to 18 gigawatt production in the future. And this comes after they bought Exelon Solar business for $810 million in the past couple quarters. So this does expand their energy capabilities that has increased 6-fold since 2015, which is a huge increase. And they are very diverse in where their locations are, having locations in North America, Latin America, Asia, and Europe. And so this isn't a company that's going to be innovating in one specific area of renewables, but I do think the most attractive thing about their stock and their company has to do with their track record. Over the past 20 years, the company has had an annualized return of 18% since the year 2000, which destroys the returns that we've been seeing in the S&P 500. Looking forward, the company expects annual returns in the low teens, which is likely going to beat the rest of the market. So this is not a stock that's going to maybe see like a 1,000% increase like what we've seen with NIO and Tesla so far this year, but they have an incredible track record for renewables, which is not something you can say about a lot of other companies that have had their struggles in the past decade plus. So part of the returns come from their 3.3% dividend, and even with the increases in their price, their yield has never been below 3%. So this is a very stable company. They have a very positive impact on the environment based off of the variety of renewable energies that they've been using with hydroelectric, wind, and solar. And so, as I mentioned, they're not great at one specific thing, but they're very diverse in the type of energies that they're producing, the locations that they have, and their track record is just fantastic. So I'm very bullish on Brookfield Renewable, which is ticker symbol BEP, and it's likely going to be something that I add to my portfolio in the upcoming months because I think it's just such a positive thing for the environment, and it does have the track record to back it up. So the next stock I want to talk about is going to be NextEra Energy, which is ticker symbol NEE. Currently it's trading for $74.50, and it's up 23% on the year. And so in the past couple years, we've been seeing a switch in the overall stock market for the the companies that have been representative of the overall market. We've been seeing the removal of stuff like Exxon, ticker symbol XOM, which I believe was replaced by Salesforce. And with that switch, we've also seen a new giant when it comes to the largest energy company in the United States, being NextEra. Just a couple years ago, giants like Exxon and Chevron were considered the top companies, but they have slid. And in October, NextEra became the most valuable energy company in the US. Their overall energy capacity is large enough to power the entirety of Greece or 10% of the homes in the US. So this is a massive company. As the company reaches 15 gigawatts with wind and solar backlogs, the company is also starting to invest in hydrogen. Even with the pandemic, the company added 5 gigawatts of renewable capacity this year, and they have announced that none of their projects were delayed in 2020, even with the pandemic. In addition, they are rapidly growing. They announced that they're going to be spending $1 billion on battery projects in 2021, and they believe that they're the first company to spend that much in energy storage investments in a single year. And when I saw that amount of spending going into future production, I expected their long-term debt to be massive because they're spending $1 billion in a single year. But when I looked at it, I was very surprised to see that their long-term debt to equity is only sitting at 1.1. So this shows how much money that they've been bringing in and how stable they've been. And so it makes me feel a lot better with their massive investment into their energy storage going forward. Similar to Brookfield, NextEra has a solid dividend. Right now, that dividend has grown by 11.5% on average over the past 5 years, and their dividend is sitting around 2%. And with a payout ratio of 61%, the dividend isn't at risk of being cut anytime soon. In addition, they have 25 years of dividend growth, making them a dividend aristocrat. So this is a massive company. It's the largest energy company out there. They've invested heavily into renewables, which is very positive. And so investing into maybe a sector you don't fully understand, I've always talked about I like buying into the biggest and the most stable ones. And when I look at NextEra, I think of this as a fantastic, stable company. They're investing in themselves heavily with that $1 billion investment into battery projects on the next year. And they can back it up with the incredible amount of revenue and stability that they have with their long-term shareholder equity. So I think for an energy company, I think this is a great opportunity, and I think it's way better than what we've been seeing with some of the oil and gas companies like Exxon and Chevron. So yeah, let me know what you guys have to say about NextEra, ticker symbol NEE, in the comment section down below. Okay, so I decided to put First Solar, ticker symbol FSLR, onto this list. There are plenty of other solar stocks out there, but I decided to pick this one because it has a longer track record than most of these other companies. So First Solar is trading for $87.40, and it's up 56% on the year. First Solar is kind of in a weird spot, and I'm not really sure how I feel about it. This has been a stock that's been around for a long time, and in the past couple years, they've really struggled with competition from China. They've argued in the past couple years that China, with their incredibly cheap solar panels, have been flooding the US market and lowering the overall price, which has pushed out a lot of the actual competition. But First Solar has actually been able to survive that. And they announced recently that they have gotten their solar panels cheaper than China at this point. And this seems like a really positive thing, but they've really been changing their strategy on how the company's been run over the past couple years. And I'm not really sure how I feel about it. The company has slimmed down significantly in the past. And they've been focusing more on manufacturing of the panels and less about actually selling them to consumers. Instead of selling to actual businesses, they've been selling to the actual energy companies and have been building massive facilities. This led to an agreement with General Motors, ticker symbol GM, to provide 180 megawatts from a solar project starting in 2023. And people have been pointing out the company has been sitting on way more cash than they should be. And so I've talked about in the past that when a company brings in cash, there's a couple areas that they can actually move that money to. They can invest in themselves with research and development. They can pay out a dividend. They can use the money to buy back shares to increase the value of the existing shares, which is the opposite of what we've been seeing with NIO, who added more shares, which diluted the value. And so it's usually seen as a positive thing for investors when you see stock buybacks, or you can hold on to the actual cash and just sit on it for the future. And people have been arguing that since they've been cutting down their business significantly in the past couple years, they need to be investing in technology to further distance themselves from the competition that they've been seeing in China. So at this point, I'm not really sure how I feel about them. They do have the track record in the past year being up 56%. They have gotten to the point where their solar panels are cheaper than China, but I just don't know how I feel about it overall. In the last earnings report, the company did see a 70% increase in sales year over year, and they were up 44% since the previous quarter. So the company has been seeing growth, but I feel like they're just in kind of a weird spot. This does seem like more of a risk compared to some of the other energy stocks that we've talked about in today's video. The US government has been pretty committed to trying to get US solar stocks to do pretty well. You did have the Obama administration that put a lot of money, and First Solar was one of the companies that did take in some of that money, and they have proved it to be a positive thing because they have been able to price out China. And so it's going to be very interesting to see where the solar market goes in the future. But at this point, I am pretty neutral when it comes to First Solar. I'm very positive on solar overall, but I do kind of like something like a NextEra or a Brookfield Renewable because they don't rely exclusively on one type of renewable energy. And I think that does increase the risk of investing in something like a First Solar. So let me know what you guys have to say about First Solar, and let me know if there's a solar stock that you guys like a little bit more. And then finally, we're going to be wrapping up the video talking about Plug Power, ticker symbol PLUG. Currently it's trading for $26.30, and it's up 730% on the year. Plug Power is a hydrogen fuel cell company that does a lot about swapping out conventional batteries on a lot of machinery and different vehicles. And this has been a stock that's been around for a long time. At this point, it's been 2 decades. And up until very recently, it has not performed very well. This has been a stock that has been picked up by a lot of Robinhood investors, specifically because it's been very cheap. But when you look at the 5-year chart, you can see how crazy of a run it's been on in 2020. And then you zoom out to the all-time chart, and you can see that the stock has not done very well for a long time. But this is a very exciting type of business to be a part of. But one of the things that investors have always pointed out with Plug Power is the fact that they have never been profitable in their 20 years. And so for a lot of these companies, I always think about Tesla. That has been kind of one of the red flags for a long time, is that they have never been profitable up until like 8 quarters ago. And now they have had like 8 straight quarters of profitability. But for a lot of these upstart and innovative companies, you do want to see profitability. And the stock has been around for 20 years and has never gotten to that point. And so people have been wondering, when are they going to be profitable? They have to be profitable on an EBITDA basis, which is earnings before inflation, taxes, depreciation, and I forget what the A stands for. But basically, they're hoping to be profitable on that basis by 2024, so that's still a long way away. Hydrogen fuel is a very interesting type of renewable energy. It is definitely more positive than using fossil fuels, but I don't think it's the most green approach out there. And so it's going to be very interesting to see how well it's going to translate to the actual market, because at this point, Plug Power has been around for 20 years and they haven't really gotten a hold. But I think the investments from the government and a lot of the environmental goals for the next 50 years are going to push it in the right direction. And I think investment in hydrogen is going to be very exciting. But for a short term, I'm a little neutral on the company just because based off of the track record and the 700% increase that we've seen so far in 2020, it's kind of hard to justify that move. There is a lot of excitement going forward, but I just don't know how I feel about it in the short term. Long term, very bullish. I'm very excited to see them finally get profitable by 2024 if that actually happens. But right now, for a short term, pretty neutral. Long term, very bullish. So let me know what you guys feel about Plug Power, ticker symbol PLUG, in the comment section down below. All right, so let me know what you guys have to say about these clean energy stocks. I think clean energy is going to be a very interesting place to invest in the future, just because a lot of these countries have come out and said that they've had these very aggressive plans to try to get rid of fossil fuels for the internal combustion engine. I'll put up a map of the countries that have committed to doing that and the years that they've committed to do that by. You have the upcoming Biden administration that has said that they're going to invest $1.7 trillion into clean energy initiatives. So this is going to be an area that's going to get a lot of attention going forward. And so I think this is an industry that you could still invest in at this point and have incredible returns. There are some companies that I'm a little worried about in the short term because they've done incredibly well so far this year with NIO and Plug Power, but I think this is an industry that's very exciting, and I'm very excited to be a part of it, which is why I've invested in stuff like GE. And I do think I'm going to be buying into Brookfield in the future, just because of the incredible track record that the company's had, just how much of a positive impact they've had overall. So let me know which clean energy stocks I missed on this video. Thanks for watching. I appreciate all the support, and I will see you in the next episode.